Welcome to Friday Takeaway. Sapura Energy has taken a battering and PUC takes an app. But before all that, Yellen and crew has expected hiked interest rates for the third time this year and raised their forecast for 2018 economic growth. The Fed, however, stuck to its guns for 3 more rate hikes next year. In what was actually her final press conference, Yellen also commented on Bitcoin, calling it a highly speculative asset, but says that the risks posed are apparently very limited. And in a move that means that Disney owns pretty much all of your childhood, the House of Mouse is buying most of Rupert Murdoch's Fox entertainment assets for $52.4 billion, 66 billion if you include the debt. This includes the TV and film biz, leaving out, of course, the news portion. Disney is clearly trying to shore up its content base for its upcoming streaming service. And while for fans, it probably means that now Hulk can fight Wolverine, the $2 billion in cost savings they talked about means people are going to lose jobs while Rupert Murdoch just gets richer. The World Bank is expecting Malaysia's GDP to continue at a strong 5.2% and says that this is stronger than expected growth. Actually, it creates a lot of opportunities for deeper structural reforms, which we hope happens. Okay, thanks to that World Bank report, the market saw a bit of a lift on Thursday, closing up at 1,759 points. It's down a little today at 1,754.13 points, but still up week on week by 1.9%. One particular stock that caught everyone's attention this week was Old Town, which received a 1.47 billion ringgit buyout offer from Dutch company Jacobs Douwe Egberts. I hope I said that right. It intends to privatize the company, which means no more Kopi C and more coffee. Moving on. Yikes, Sapura Energy's share price didn't take its loss very kindly. They are one of the largest oil and gas companies listed on the bourse and was formerly known as Sapura Kencana Berhad, and the man at the helm is Tan Sri Syahril Shamsuddin. Sapura did not have a very good third quarter. It suffered a net loss of 274.4 million due to just, lower contributions from engineering, construction and drilling, reflecting just how tough it is in the industry despite what you see as better oil prices. The share price took an absolute battering, tumbling from over a ringgit to just above 80 cents. Yet, there is some hope, because consensus seems to point for better times ahead for the ONGE sector, with CIMB saying that there is more optimism to look forward to for the second half of FY19. Also, the EPF took the chance to up its stake in Sapura Energy, and big investors like that often do give a boost of confidence in prospects. 80.5 cents was where it was this morning, a historical low, especially when you consider 3 months ago it was around 1 ringgit 60. Well, yes, some saw weakness in the share price as an opportunity to buy, but analysts are still decidedly mixed. Public Invest lowered its FY18 forecast to a loss of 53.6 million, but kept the outperform with a target price of 1 ringgit 69. MIDF downgraded its call to neutral with a revised target price of 1 ringgit and 1 cent. CIMB, on the other hand, upgraded its call from hold to ADD as it sees long-term value. PUC saw an interesting change up this week as it switched from photovoltaic to shopping. Formerly known as PUC founder MSC Berhad, they are an electronic services provider and they own a photovoltaic plant in Sungai Petani, Kedah. They put the renewable energy business on the back burner and shifted their focus to e-commerce and the e-wallet business. That is slated to roll out this e-wallet by early 2018 because they already got Bank Negara's approval for it. They were also named as one of Asia Analytica's stocks with momentum. For its third quarter ended September 30th, 2017, PUC reported an 86.2% decline in net profit of 125,000 compared with 906,000 a year ago. Because of staff and admin expenses, that actually went up because PUC was focusing on developing the e-commerce and that fintech related business. And the solar thing apparently really didn't work out because they said they looked at the rates and commercial reasons and looked for other options to spend their war chest on. Remember, they were actually supposed to build more plants. 27.5 cents this morning, a one-year high, in fact an almost all-time high, an absolute tear over the past few days. Nobody covers it, but historically the average in the past year has been around 13.5 cents. So yeah, you see that large gap.